Good evening, traders. This is Rich Derrick from Tradesight. Just want to take some time here and take a look at the current technicals of the market and talk about what we might expect for the last day of January here, January 31st, trading session coming up for this Thursday. The current session saw a bit of distribution pulling back from range high. SPOOs were down by about 10 handles on the day, losing that 1500 level, at least for now. And the NQs were down 7, but on a relative performance basis, much better off than the broad market, as measured by the S&P side. The commodities were kind of a mixed bag. We saw a pop up in gold and silver. Oil was holding fairly steady, but nothing too dramatic. The weakness in the Japanese yen continues. We hit a new high in that pair versus the dollar, with the dollar picking up strength and the Japanese yen weakening. Also, the move in the euro has been pushing up again in favor of strength in the euro, weakness in the dollar. So definitely need to respect that trend until that flips around. The VIX had a pretty good pop today. We were up a full point in the VIX, which was up about 7.5%. Since we're coming off of range high, we want to take note of that, and we'll look at those charts in a little bit. All right, now here's a look at the ES futures. Again, we're still kind of just pivoting around this 1500 level for now. We did push up above it in the previous settlement. Today we're going to be let me see what this closes. 1, 2, 3, 4. I'm going to have to drill down to a smaller chart. We're going to be really close to printing 9 days up here. But either way, we are definitely interacting with that 8/8 level in the GAN box here at 1500. So this is definitely a point where this run is going to have resistance, where this run is going to perhaps take a pause or even just turning back to the downside here. So what we want to do is we want to make sure that this trend holds above the 10 EMA. That'd be the bear case, the bull case rather, and we want to make sure that that this is just a consolidation area and not really any kind of a meaningful turn to the downside here. But for now, what we really want to do is we want to focus on this 10 EMA, which has been defining the trend all year here so far. And the NQ futures have done nothing this year. As you can see by my cursor here, we close within the year's opening daily bar, and we've done absolutely nothing. So while the S&P side has pushed out to new highs, and there's been quite a bit of talk about Dow 14,000, Dow 15,000, the Nasdaq is not cooperating and participating, which definitely could be a deal breaker. So we're definitely going to be monitoring the relative performance of the Nasdaq side, and we'll look at that again as we always do a little bit later in the presentation. But for now, we just have to take note that the Nasdaq side has done nothing but churn sideways year to date, and I don't expect anything to change significantly before we close the first month of the year after tomorrow at 4 o'clock. Here's a look at our multi-sector daily chart, and really kind of tells you that we're really starting to see potentially a little bit of a shift here. We've got a potential turn up here in the XAU, so we're going to monitor that closely. We had a pretty good distribution day in the BTK and relative weakness there, and we're definitely going to take a look at that chart a little bit later. Broad market is really just kind of hanging on to that strength still from the financials. They haven't really reversed yet, but we're definitely going to keep an eye on this going forward. Now, internally, the market still remains fairly neutral. We're going to take a look at the 10-day trend here. The 10-day trend is still fairly neutral. We have not yet hit that 0.85 overbought threshold. So remember, the 10-day trend works in the opposite direction as the market. As this moves lower, we're seeing bullish price activity in the market. As the 10-day trend moves higher, we're seeing bearish activity in the market, or downside action in the market. So we haven't hit that overbought threshold of 0.85 or more, so there's still potentially more gas in the tank here if they want to take things higher still. Now, looking at the put-call ratio, this is the total put-call ratio. So the total put-call ratio is defined by the equity options and also the index options. So looking at the total put call ratio, we did see a little bit of a pop here. Definitely the highest reading that we've seen in a couple of weeks. Not the highest reading quite yet of the year, but really, really close. We've essentially matched that. So we're seeing a little bit of a scramble here for some downside protection in the market, but we're really, really far away from any kind of a climactic move. But we saw a little bit of a bump up here as traders were scrambling for some option protection on the downside as of the current trading session. All right, here's something we haven't looked at in a while. This is the SOX versus the NDX. So this is a ratio of the SOX divided by the NDX. So if the ratio is rising, we're seeing good relative performance in the SOX versus the NDX, which is definitely something that you need to see for the NDX to really perform. The semiconductors are a pretty big component of the NDX, and for a positively trading NDX, we need to see this continue to rise. We have broken out above this prior high here in the ratio, which indicates some relative strength in the SOX. But remember, this is really kind of a recouping of the extreme relative weakness that this particular ratio has had. What I want to do now is let me just give you a little frame of reference here, a little different perspective. I'm going to jump to the weekly, and what we saw here is really a pretty nasty breakdown in relative strength in the SOX versus the NDX. When we broke down below this prior area of support in the ratio, we really started to see the SOX versus the NDX pick up a lot of relative weakness. Now we've since climbed back above here. This is the area of the daily chart that we just looked at. But I just want to point out that we have not yet reclaimed this key breakdown area. And if we do get above this key breakdown area in the ratio, that would be very, very positive for the NASDAQ. But probably until we see this ratio break back above this area, we're probably going to continue with this mundane action in the NDX and just kind of going back and forth. And the SPX versus the TLT continues to hold above that breakout area. Hasn't really moved above it too convincingly yet, but for now we've at least got some positive action going. Today you can see when I go down from the weekly chart that we're just looking at to the daily chart, you can see that we just did have a little bit of a pullback here. So what we want to make sure is we want to hold above this area here. We want to hold above this area. If the market wants to pull back and gain that 1500 area and kind of recharge itself, that's okay. But what we want to see is we want to see that risk on appetite still evident in our analysis. So, and the key thing for that is going to be holding above this this key area that is just broken out above. So we're definitely going to be taking a look at this again next week. All right, now there's been a lot of attention paid to the energy sector recently, with the rotation going on out of these higher beta names like Apple and whatnot into some more later cycles plays like the energies that we've been talking about in the reports. Just want to point out a little divergence that we saw here. We're starting to see a little bit of a separation here between the OSX, which represents the oil services stocks, and the oil futures. The OSX is the red line on this chart, and the actual futures are the blue line. The oil futures held up better today than the oil services stocks. We had a little bit of selling in the overall stock market, so we saw a little bit of profit taking in some of these oil services names. What we want to just be on guard for going forward is that this little separation doesn't turn into a trend where oil services stocks at OSX, this is the red line, starts to really start to fall and pull down away from the crude futures. In a decent move, you're going to see the OSX, which is the red line, lead to the upside, and then crude will follow. Right now they've been just kind of trading hand in hand, which is okay. It's not particularly bullish, but it's all right. What you want to make sure you don't see is that you don't want to see that divergence where the oil stocks start to roll down while oil futures are still holding or moving higher. That's a divergence where you start to get into a problem where, okay, this is actually going to turn lower. If you look to the left of the chart here, we actually did have this condition. Oil futures in blue here, pulling out and really trading much more aggressively to the upside in the oil services stocks represented here in red were really lagging. And ultimately what happened? Well, the whole complex started to move back to the downside. So this is a classic divergence that resulted in downside for both parts of the equation. What we want to make sure is that we're not starting to see a similar pattern develop where oil futures head higher and then there's a non-confirmation or a discrepancy with the oil services stocks heading lower. So we're going to keep an eye on this going forward. Okay, guys, onto the key sectors. Top sector today was actually the hardware index. That was up a little less than 0.5%. It was up about 0.41%. What we have going here is we have this breakaway gap to the downside off of the VMware earnings and whatnot that came out. This is the disk drivers, the storage techs, and the Western Digitals. So what we posted here on this last session was just a little inside candle. So make sure you delineate the high and low of this previous day on the breakaway. When we resolve that little inside day here, we could have some nice setups. So definitely keep an eye on that going forward. The SOX index was definitely pretty lackluster today, but it was one of the better performing sectors on the day. It was actually up a little bit on the day, which outperformed the NDX. So still seeing a little bit of relative strength, but keep in mind here that we're still in this overbought area on the GAN box. So we're at +1/8 still in the SOX. Now the BKX really just kind of just leveling off here and trading very flatly. We're again overbought on the GAN box, starting to consolidate and threatening to interact again with the 10 EMA. If we close below the 10 EMA, this 8/8 level on the Murray Math box at 53.91 is immediately going to come into play. The XAU was down about 0.5% on the day. Hasn't really been able to pivot and move higher. Still kind of being pulled by this 0/8 level on the Murray Math box. No real resolution to this out of this little mini pattern yet. We did reach up and interact with the 10 EMA today, but never really got above that, and certainly didn't take it out. So definitely trade this one as scalp only until we either make a new low or take out that 10 EMA to the upside. Here's the oil services index. Got a little bit of a problem here. We have kind of this king and queen pattern popping up here at range high. Haven't been able to get up to this 250 level, which is the 8/8 level. Definitely want to keep an eye on this to see if this resolves itself to the downside. Again, this goes to the chart that we were just talking about, looking at that comparison chart of the OSX relative to crude. So we need to see this really kind of just level off here and hold up and not start to roll to the downside here. BTK had a fairly negative day today. Was definitely weaker than the broad market and also the NDX. It has reached up and started to interact with this +2/8 level, but today we closed back down below the 10 EMA. Note that on the daily chart here, this is the first close this year below the 10 EMA. So if we follow through to the downside, that will change the short-term trend in the BTK to short-term negative. This could be just wind up to be a source of funds moving into some more later cycle plays. The BTK is usually one of the earlier plays in the recovery cycle. So this definitely, even if the market is holding up, this could be a source of funds and provide us with short opportunities. So we're going to be looking for short setups in the BTK if we break below and follow through this 10 EMA on a closing basis. Taking a look at copper futures. Copper was definitely one of the stronger sectors on the day. We've actually made a new high close on this move, taking out these prior highs. We have not made a new absolute high relative to this previous range here, but we're very, very close. We're now interacting with this seeker exhaustion signal, but this is probably one of the weaker seeker setups you're going to see. Here's 1 through 9, the setup phase. 1 through 9, we cleared all of the major moving averages, the 50 and the 200, but we really have barely just done anything. We've really gone sideways here. We had this sharp pullback here and haven't really had any expansion to the upside here to really get some extension on this move to get a nice seeker exhaustion signal. So I think the seeker signal is kind of suspect, but at the same time we have to respect it when it's on the chart. Right now this risk level is going to be key. We hit it today, did not close above it, so we're not threatening to break it just yet, but we definitely want to be aware of that level for copper. Moving on to the oil futures. Oil today was higher on the day, pushing up a little bit closer to that key 8/8 level, which is 100. And also just want to remind everybody that this static trend line off of this 9-bar setup to the downside is just below that 100 level. So we've got kind of a layered level there that's going to have some extra potency if and when that does trade. Moving on to the gold futures. Gold today was definitely higher and popped, getting some relief. We're still kind of in this triangle where we're just kind of working off this DTL to the downside and this little mini one to the upside here. So no real resolution. We're still below the 50 DMA, and we really need to take out this area here. If we do take out this area here, we'll have qualified for a higher high for the first time this year on the daily time frame, and we'll have to monitor that. So that's going to be it for tonight. Hope everybody has a good trading session tomorrow. And as always, please feel free to leave comments below. We welcome them. This has been Rich Derrick for Tradesight, and we'll speak with you again.